If I ask you a question, what causes high inflation? What would your answer be? You're probably thinking of the two or three obvious reasons, but it's highly likely that you would not have thought of this word, greedflation. What is greedflation? That's what we're going to focus on in this episode. Welcome back to Business Matters at the Hindu with me, K. Bharat Kumar. Rising corporate profits have contributed to almost half of the increase in inflation in Europe over the past 2 years, according to a blog post by the International Monetary Fund. This is because companies' profits have surged far more than the rate at which their costs have increased. So, for example, if I'm running a company and I have labor costs and I have a cost because of my raw materials that I procure, they may be increasing by 5% or 7% or 9% on average per year. And if my profits have surged 50% or 100%, there's a disproportionate increase there. Europe's higher inflation so far mainly reflects higher profits and import prices, with profits accounting for 45% of price rises since the start of 2022. What is greedflation? Some call it profiteering. Like I said, if your profits have surged far more than your costs have surged, then there is a disconnect there, and some economy watchers tend to think that companies are taking advantage of the situation. In this blog post that we refer to, the International Monetary Fund asserts that Europe's businesses have been far better shielded from the adverse cost shocks than the workforce itself. That is evident from the fact that profits of corporate Europe were 1% above pre-pandemic levels adjusted for inflation, while labor costs were actually 2% below the trend line. Early last month, the Guardian newspaper of the UK cited a report by researchers at the trade union Unite that focused on profits made by Britain's two largest supermarket chains. Unite's figures, which are drawn from the firm's own financial reports, show that Tesco's and Sainsbury's operating profit margins in 2022 were the highest in 8 years. It seems that the pandemic and then the Russian invasion of Ukraine gave both firms a chance to reset prices in the public's mind. This trend is not confined to Europe alone. In an article last year, the Economic Policy Institute indicated how companies in the US contributed significantly to inflation during the peak of the pandemic. As we saw in the case of Europe, US companies too chipped in with their profits, driving up inflation significantly more than either labor costs or raw material costs had. And to show that this is not normal, the article also indicated the average between 1979 and 2019. In past periods, the average corporate profit contribution to inflation was only about 11%, while in recent times it has actually grown to about 54%. Other economy watchers indicate that the companies are not wholly to blame. In an interview last year, at a time when surging US inflation was a cause of concern the world over, Professor William Dickens, professor of economics and public policy at Northeastern University, said it's not like suddenly there was a nefarious plot by companies that were colluding to take advantage of customers. He points out that in a situation where raw material prices keep increasing, companies take the opportunity to increase their prices to consumers to make up for past losses or to factor in future price increases as well. He explains an economic concept called customer markets. He says it holds that firms don't like to raise prices because consumers get mad. And so if the companies are in a situation where they feel they can raise prices, they'll take advantage of it if they've had increases that have accumulated over a long time and their profit margins have been eroded. Then they'll use the excuse to make up for past cost increases and also sometimes for expected future cost increases as well, he said. And of course, he points out that in the case of some industries, energy prices form a large part of their costs, like he says, agricultural markets. And he says when those energy costs go up as they did last year in the US and the rest of the world, then that will have to start reflecting in retail prices. And it's ironic that he touched upon agricultural markets in that interview. 11 months later, in India, we are in a situation where tomato prices have increased 5 to 6 times in a matter of days. Agri watchers are actually blaming erratic weather. Some producing regions in Karnataka, Maharashtra, and some parts of Rajasthan have seen some heavy rainfall, which has actually impacted arrivals. Arrivals are at about 30% of what they were in the previous month. So whether or not greedflation is stalking the globe, we in India have to take note of all the points that global institutions such as the IMF are making. Because as a country, we are not still out of the woods yet when it comes to inflation. Because even though for April and May, consumer price index based inflation was at 4.7% and then 4.25% respectively, which is like lower than the preceding months, the RBI said that the target is to bring down the inflation rate significantly. Bringing it down below the upper tolerance band of the RBI itself at 6% is not enough, is what RBI said in its monetary policy statement in early June. The governor, Shaktikanta Das, said that the focus is to bring it down to 4%, which is at the midpoint of the 2 to 6% range that the government has mandated RBI to maintain inflation at. The RBI's own estimate is that inflation in India will actually rise, even if only gradually, through the course of this year. The central bank estimates retail inflation at 5.1% for the entire fiscal 2023-24, with Q1 ended June 2023 at 4.6%, Q2 at 5.2%, Q3 at 5.4%, and Q4 at 5.2%. Now, how have corporate India's profits behaved in recent years? Though we are yet to see data that directly correlates corporate profit growth to inflation in the country, here are other pieces of data that tell us what to watch out for. The graph you see on your screens shows the significant increase in quarterly profits that Indian companies have seen in the past 3 years. The data is for Indian companies listed on the stock exchanges and is from the Center for Monitoring Indian Economy. Though the data shows that in terms of percentage growth, the January-March 2023 quarter saw the slowest growth over the year earlier period, the absolute numbers reveal a significant rise over time. A report last month by brokerage Motilal Oswal showed that profits, corporate profits as a percent of GDP in India had slipped a tad. It had gone down to 4.1% in FY23 compared with 4.3%, which is a decade high in FY22. But the context is in comparison with the West. In the US, corporate profits as a share of the economy had gone past 8% and was approaching 9% levels since the start of the pandemic in 2020. And they are reaching levels last seen in 1929, almost 100 years ago. What do you think? Are healthy corporate profits a sign of a wealthy and progressive nation? Leave your thoughts in the comments below. This is a very interesting topic. And before we go away, here is a factoid. In this conversation, we touched upon tomato prices. But here are the actual figures. Did you know that tomato prices touched 8,500 per quintal in this instance, the Binny Mill Fruits and Vegetable Market in Bengaluru on June 26th, compared with 2,700 per quintal on June 20th? Just think of this, a more than threefold jump. In the Kolar market, prices ruled at 3,330 against 2,130 in the same comparative period. Want more information? Go to this URL and check it out. That's all we have for now, but if we come across any more interesting economic concepts like greedflation, we'll bring them over to you. If you're watching this on YouTube, do not forget to like, share or subscribe. And till we meet again, have a lovely week ahead.